Hi, I'm Alex and I'm the product manager for Aplos. Today I'm going to tell you about fixed assets and how you would track those for your organization. Now, as a disclaimer, this is a pretty big topic and it gets complex, so I'm going to do my best to keep it basic for today, but then we'll have other videos that go into more detail later. So when you're talking about fixed assets, you're actually talking about an item that your organization owns that is spread out, the cost of it is spread out over multiple years, and you want to track that item on your balance sheet. Okay, so when you're thinking about what would be considered a fixed asset, there's two things that you need to consider. First is your capitalization policy. Now what that means is if I'm going to buy an item and that item is over a certain value, it's going to equal a fixed asset. So if you go to the store and buy pens for $20, that doesn't really qualify as a fixed asset. It's just an expense. But if your organization says that any item over $2,000 is going to be considered a fixed asset, then that's your capitalization policy. Once you have that and you know what your fixed assets are going to be, then you have what's called a depreciable life policy. And that says that any fixed asset is going to now depreciate over a certain number of years to spread the expense out. So there are certain year requirements depending on the type of fixed asset, whether it's like equipment or a building or a car or something like that. But let's just say for basic $2,000 and 5 years, okay? So over here, we buy a computer. That computer is $2,000. So it meets my threshold for what would be considered a fixed asset. So then that fixed asset is going to be depreciated over the next 5 years to spread out the expense. So in year one, I'm going to post that I have a depreciation expense for 2,000 divided by 5 is $400. And if it's what we call straight line depreciation, which means it's the same for every year over the span, then year 1, 2, 3, 4, 5 is all going to be the $400 depreciation expense. So at the end of the 5 years, you have now depreciated this item that costs $2,000 down to zero, so your balance sheet shows zero, but you've spread out the expense over 5 years, so it helps you with tax purposes. So again, that's a very basic example of what depreciation is and how you would track it for your organization. So down the road, we'll get more into detail on these two topics of what exactly is a capitalization policy, and then for depreciable life, what items are what years, we'll go through that, and then some other examples of how you can depreciate items over a different period of time. If you've enjoyed today's content, feel free to click the subscribe button and we'll send you more emails with more tips. Right here, subscribe button. You can even use this little mouse. Subscribe. More about clicking? Click it.